You know, I really hate doing this type of video. However, it is a very hot topic at the moment and for some very good reasons. If you go on YouTube and search for housing market crash 2022, you're going to get, I don't know, probably a couple thousand results. And most of these prognosticators are saying the housing market is going to fall apart in a couple of weeks. So you'd better start selling your home. One of these guys, whose name was screen name was Epic Investor, predicted the crash was going to happen in 2 months. Really, he can predict the housing market that close? Probably ought to start selling something like Bitcoin futures. I really hate doing this type of videos for several reasons. Mostly because it's boring. I'd much rather be talking about the housing market and the developments and the new developments going around, but here we are. So these types of videos are a guess. No one can predict the future, not even the best economist, much less Mr. Investor, Epic Investor. So what I plan to do is give you some data and you draw the conclusions. Welcome to our YouTube channel. Hope it isn't your first time, but if it is, please click on the subscribe button down below. Hit that notification button as well, and we will let you know when our next video is published. My name is Mike Lavoie. I am a broker associate with Dalton Wade Real Estate here in the beautiful Tampa Bay area. Most of you know me as a realtor, but I'll bet you didn't know that for several years I was a financial analyst.
I'm good with water for now, though. Thank you.
It's his first day on Wall Street. Give him time.
The reason I tell you this is because I know how charts and data work. It can be skewed to fit almost anybody's agenda. We all know that doom and gloom sells. Those soothsayers on YouTube know that as well, so they beat the doom and gloom to death. Go ahead, ask me why. They get paid for viewers. The more people that watch your video, the more money they make. It's marketing 101. Go where the people want to go. Right now, the housing market is changing. It's one of the most searched phrases on YouTube is housing crash of 2022. Between the political climate we're in, mortgage rates going up, inflation hitting us, people are concerned. But really, suggesting that you sell your home based on the fact that the value may go down even 20%. I mean, what are you going to do? Live in the street? Fill the equity and from the sale of the house into rent? I don't think so. The people that got burned in the last market crash, remember 2006, 2009, were the people that shouldn't have bought a house to begin with. Those people, they went into the deal with 0% down and adjustable rate mortgages, unverified income and assets. You remember, all you had to do was be able to sign a mortgage application. If you couldn't do it, the mortgage lender would help you. That was back when I was a financial analyst. People would come to me for my opinion on buying pre-construction condos down in Apollo Beach with no money down. The idea was to sell the condo before it went to close in an effort to make a quick $1,000 or two. It was stupid stuff like that got people hurt. Those YouTube soothsayers are trying to draw parallels between 2006 and now, and there are some statistics that resemble 2006, but not enough to make it 2006. I'm going to give you some national data first, then boil it down to Florida and finally the Tampa Bay area. I'm going to try to go as quickly as possible because it is boring. Most of this data was taken from the MLSs across the country and compiled by Redfin. They do a lot of research and publish it. Redfin is a real estate brokerage and I'm a preferred partner agent with them, but I am not licensed with them. But I do help them with some of their buyers and sellers. One more disclaimer. These numbers are showing a return to a more normal market, but they are small changes. Most of the differences are very nominal, but it is a trend that has started beginning the first of the year or so. Let's start with some national data. We all know mortgage rates have gone up since the first of the year. They almost doubled to 5.3%, making the median mortgage payments, principal and interest, about $2,300, and that's up 40% from last year when the average rate was 2.9%. Rising rates is probably the biggest single factor in all the rest of the numbers I plan to cover, like pending home sales. Pending home sales is a forward-looking indicator, and that's because pending sales are what would just sign just like today, but they won't actually close for 30 to 45 days. Nationally, pending sales are down 13% over the year. That's the biggest decline since May of 2020. New listings of homes were down 1.4% year over year. So what I'm thinking is that a lot of the homeowners that were considering selling for whatever reason are now looking at a 5% mortgage rate on that new home and are holding back a little bit saying, we really want to do this. And active listings, it's the total number of homes for sale at any given time, fell 2% year over year. Another number I find interesting is that homes sold were on the market for 18 days. That's up from 15 days last year. And finally, On average, 7% of homes sold each week had a price drop. That's as high as it's been since 2015 when they started keeping track of that number. So, you've got active listings down, new listings down, pending listings are down, sales are down, and a record number of price drops. Add to that, the mortgage rates have pretty much doubled since the beginning of the year. And mortgage applications, they're down 17% from last year. Sounds pretty bad. Let's take a look at Florida and talk about migration. Homeowners moving from one metropolitan area to another remains at all-time highs in both April and May at about 32%. And has been that way since the first quarter of 2021. That's a huge jump over pre-pandemic levels of 26%. And take a guess at where the most popular place to move is. Florida. Of all the metro areas in Florida, guess which two top the list? Miami, where almost all of them are coming straight down from I-95 from New York. And number 2 is Tampa, with 11,000 homeowners in the first quarter of the year coming down here. Let me emphasize homeowners, aka home buyers. According to Redfin's data, Tampa is popular for relocating homeowners primarily because it is still relatively affordable. Homes are selling around the $370,000 mark in April, and even though those prices are up about 28% year over year, we are still well below the national average of $424,000. Redfin states that Tampa is still seeing a pandemic-driven boom of people mostly from New York and the Northeast. A lot of them are moving to Tampa permanently to work remotely, and I would have to agree with that is very accurate. The vast majority of people I am working with out of state are coming from the Northeast, but there is a large number coming from the Midwest and the occasional oddball from Arizona or California. National news is something to keep in mind, but we all know that real estate is local. So what has this influx of homeowners done to the Tampa Bay area housing market? By the way, I'm going to go through this pretty darn quick because it is very darn boring. But I want to make a point, and these numbers are needed. What it's done to the area prices is it's up about 28% over year. It has made competition for a listed home, well, pretty darn intense. It's frustrating buyers. It's happy times for sellers. But that is all going to change, and will continue to do so until probably the end of the year. Overall, in the Tampa area, metro sales are down almost 10% year over year, but they are still well above the 2020 level. I think a lot of that is the new home builders. 10 months ago, if I got a response from an email that I sent to a new home sales rep at Lennar or Pulte or whatever, well, let's just say it was a very special moment when I received that reply. The last 6 months, I get 10 emails from different builders on how they love me now. They want my buyers to come out and they want a deal. Pending sales are down to 1,134 homes, which is down 24% from last year. The chart that is very impressive is the percent of active listings with price drops. Just over 11% of the homes listed had a price drop in the month of June alone. Another 10% or so were in May. Again, I think a lot of that is in the home builders like Lennar. Once again, they've overbuilt and are discounting inventory to get rid of it. Go ahead, ask why they're doing that. Build time for a home is 12 to 16 months, so a lot of new construction homes were put under contract last year when the rates were closer to 3%. Those buyers are just now applying for a mortgage to lock in their rate at 5% or more. A good number of them can no longer qualify for that mortgage, causing the deal to fall apart, and that new construction home is going back on the market. In the month of June, 60,000 home buyers canceled deals. That's the most it's been since the early days of the pandemic. That was 15% in June and 13% in May. A release from Zonda, no, not Honda, this is a reporting company, found that over half of the home builders are reporting an uptick in cancellations in the month of June. Rick Palacios, director of research at John Burns Real Estate Consulting, noted that on Twitter that a lot of new home builders are canceling. A lot of price cuts are becoming common, and a drop in demand and construction costs has been cooling off the market. I think a lot of that is due to interest rates. Builders like Lennar can't afford to hold a property. That's not what they're designed for, so they mark the price down to move the property out of their inventory. The other group where there's a price drop is a lot that you see a lot are companies like Opendoor and OfferPad, those type of companies. They bought homes basically sight unseen with, well, we'll make it easy to sell your home program, trying to flip the home and make a buck. Now that the market is slowing nationwide, they want to get rid of the property, so they're discounting the properties. One would assume that based on those numbers, that homes that we're selling for a lot less. Wrong. The median sales price is $393,000 in the Tampa Bay area. It's up 28% over year to year. The median list price is up just over 27%. My guess, and it's only a guess, is that the investors, affectionately known as flippers, are out of the market. They were buying homes at lower prices, and my theory is that they're doing a lot less of that now. It's really hard to find a home that can be easily flipped. I think sales are down partially because of that. However, rising mortgage rates are also part of the deal. The homes that were being purchased are being purchased by the end user, those 11,000 new area homeowners moving in. They're paying what the sellers are asking for, or pretty much a little bit over. It's actually at 1.1% of list price, which is keeping the median sales price up. How long does that continue? It's anybody's guess. What I can show you is active listings are on the increase and have been since basically March. And with both sales and pending sales down for the year, inventory as measured by months supply has been increasing since March. We're now at 6.5 weeks, which, I agree, isn't great, but it's a lot better than it was 2 years ago when last year when we were at 2 to 3 weeks of inventory. Okay, let's boil this all down and go do something interesting. Inventory increasing normally means lower prices, but we're not there yet. With the increase in inventory, I do think that we will continue to see a moderate level of price decreases over the next 6, 8, 10 months. But if you're waiting for some 15 to 20% drop, it ain't gonna happen. It may be closer to 5, maybe 10%. In the meantime, mortgage lenders I've talked to are looking at 7 or 8% for a mortgage rate by the end of the year. Waiting to buy could get you a lower purchase price, but a relatively higher interest rate. Maybe, and not maybe, it will be a higher payment. Trying to time a purchase of a house is going to be like catching a falling knife. It's going to hurt either way. If you have questions, give me a call, send me a text, email. I love to talk about real estate. If you haven't signed up for or subscribed to our program yet, our YouTube channel yet, click the button down below. We'd love to hear from you.